Welcome to this explainer. We're diving straight into the highly anticipated, truly historic 2026 SpaceX initial public offering. Look, there are just massive headlines flying around out there right now, so our goal today is simple. We need to separate that immense market hype from the actual financial reality. We're going to look at the raw numbers, peek under the hood at the business engine, and critically map out the very real risks involved here. So here's our flight plan. We'll kick things off with this historic market debut. Then we'll peek inside the SpaceX engine, unpack that massive valuation, expose a huge catalyst for volatility, and finally, we'll navigate the real-world risks. Let's get right to it. Starting with Section 1, a historic market debut, peeling back the headlines of this record-breaking offering. We've got to start with the absolute unprecedented gravity of this event. $1.75 trillion. Yes, trillion with a T. This target valuation for SpaceX makes it potentially the largest stock market debut in history. No exaggeration. At this level, SpaceX immediately ranks among the most valuable publicly traded companies on the entire planet. I mean, we're talking about a valuation that is literally worth more than the GDP of many countries, and significantly more than established global corporations that are already pulling in tens of billions in annual profits right now. Mechanically speaking, regulatory filings indicate the company is aiming to raise a massive $75 billion at roughly $135 a share. This incredible demand is, well, it's fueled by absolute industry leadership. They completely dominate commercial launch services and they have incredibly strong brand recognition. But what's really unique here is the huge wave of retail investor interest. This means a good chunk of these shares might actually be allocated to everyday, individual investors, rather than just the usual Wall Street institutions. Moving on to Section 2, inside the SpaceX engine, what are investors actually buying? Okay, before we can really critique that massive price tag, we have to pivot from the financial hype to the actual physical technology. You aren't just buying rockets here, you're buying into a highly diversified space infrastructure company built on four main pillars. First, you've got launch services, which includes the Falcon 9 and Falcon Heavy rockets, launching everything from satellites to astronauts. Then there's Starlink, a truly global satellite internet network that's already serving millions of customers worldwide. Next up is Starship, the next-generation rocket designed for deep space and eventually Mars transportation. And finally, you have their emerging AI infrastructure projects, which are proposing wild concepts like space-based computing and data centers. Now, I know deep space missions to Mars are exactly what captures the public's imagination, but analysts are quick to point out that the global internet network is the actual real-world financial engine today. Just look at this quote. Starlink is currently the company's most important revenue-generating asset. It's the workhorse. Supporters of the IPO strongly believe that the expansion of this global internet service, combined with their ongoing launch contracts, is the foundational piece that could make SpaceX one of the absolute most important technology infrastructure companies over the next decade. Which brings us to Section 3, unpacking the valuation, the math behind the trillion-dollar market cap. So, here is the underlying math you absolutely must understand. Unlike established blue-chip corporations that are valued based on today's massive, proven profits, buying SpaceX at an IPO means you are strictly purchasing expectations. You are buying years of future growth. Critics rightly point out that much of this $1.75 trillion valuation reflects expectations for continued Starlink subscriber growth, the successful commercial deployment of Starship, and those future AI initiatives we talked about that haven't even been fully realized yet. Make no mistake, you are paying a hefty premium for a very, very ambitious future. So just how sensitive is this valuation to everyday market sentiment? Well, notice our baseline here. The IPO price of roughly $135 gives us that $1.75 trillion market cap. But watch what happens if sheer enthusiasm pushes the stock to $200. That jump alone would add nearly $850 billion in market value. On the flip side, a drop to $100 instantly erases about $450 billion. Keep in mind, the underlying business hasn't changed one bit in these scenarios. The only thing that shifted was investor expectations. It's incredibly volatile. And that leads perfectly into Section 4, the catalyst for volatility, why the stock might swing wildly. To really grasp why this stock is probably going to experience massive turbulence right out of the gate, check out this incredibly uneven distribution. Reports indicate SpaceX might have an unusually small percentage of freely traded shares initially. We're talking only about 5 to 7%. Everything else is locked up tight. Now, when you combine this tiny, highly constrained supply of available shares with that enormous public demand and intense retail interest we talked about, what do you get? You get the absolute perfect structural recipe for wild, massive price swings. Based on past major tech IPOs, historical scenarios give us a pretty clear picture of exactly what that volatility looks like in practice. Strong first-day demand could literally double the stock price right out of the gate from its IPO baseline. But look at the inverse. If the company misses those massive sky-high future growth expectations that are already baked into the price, 30 to 60% declines are entirely possible. Just assuming this stock is going to steadily march straight upward completely ignores the basic mechanics of how the market works. Let's head into Section 5, Navigating the Risks, Looking Beyond the Launch Pad. Look, beyond just compulsively tracking the daily stock price ticker, impartial investors really need to objectively evaluate the structural risks of the business itself. You've got to consider these 4 core risks. First up, valuation risk. Like we've seen, years of future success are already assumed and priced right in. Second, technology execution risk. Successfully deploying Starship and building space-based AI infrastructure carries immense, almost unimaginable technical challenges. Third, governance concerns. Regulatory filings indicate Elon Musk is expected to retain overwhelming voting control even after the IPO, which means public shareholders will have highly limited influence over the company's actual direction. And finally, you have emerging competition from massive tech and aerospace companies gunning for them in both satellite internet and launch services. So when you weigh those incredible technological ambitions against those very real structural risks, this is the single most critical question you've got to internalize. Am I genuinely comfortable paying a massive premium valuation today for growth that still has to happen years in the future? To help you answer that, before you invest a single dollar, I recommend running through this quick 4-point checklist. 1. Ensure you actually understand how Starlink and launch services generate their revenue today. 2. Acknowledge the reality of that premium valuation. 3. Ask yourself if you can really stomach the inevitable volatility caused by that tiny 5 to 7% float we outlined earlier. And finally, 4, ensure a play like this actually fits sensibly within a diversified portfolio. The goal is to prepare your portfolio for financial reality, rather than just blindly buying into the launch day headlines. I want to leave you with this incredibly provocative truth from our source material. A great company does not automatically mean a great investment at every single price. Look, there's no denying SpaceX has totally transformed the space industry. It's amazing. But as an investor, understanding the valuation is ultimately just as important as understanding the satellites. Thanks so much for joining me on this explainer. The countdown to this historic IPO has officially started. So the real question is, will you be safely watching from the sidelines, or are you strapping in for the ride?